Okay, good afternoon. Can anyone hear me?
Okay, I can hear you.
Thank you very much. Thank you. I've been trying to confirm since I guess no one was hearing me. All right, so I'm going to start the class now. Um, yeah, thank you. Okay, welcome to cost accounting class. We are going to be treating cash budgeting today. My name is Hafsat. It's nice to meet everybody. This is 10 minutes past 2. We are just going to start and wait for others to join as the time goes on. So I'm going to share my screen now. Okay. Quick, while we wait for that to load, let's get right into the class, I guess. So we are doing cash budgeting. But I want to know how knowledgeable you are or how much you know about budgeting as a whole. Please confirm if you can see my screen. Can anyone see my screen, please? Can you see my screen?
Not yet.
Okay. Okay. I'll keep share it. But for now, okay, can anyone tell me what they understand by budgeting? Let's start from there. We are going to be treating cash budget today. Cash budget. So let's hear. I want to know what you know about like the word budget. What's when you hear the word budget, what comes to mind? What is budget? Budget and budgetary control. What do you know about it? Anyone, any volunteer at all?
I can see your screen now.
What do you think?
I said I can see your screen now.
All right. Thank you very much. Okay, so do you want to give it a try? What do you understand by the word budget? Anyone? Can you still hear me? Anyone? Okay. I guess you guys are a bit shy, so I'm just going to go ahead and call someone out, get to know you guys. So I'm going to start with Abida. Yes, if I pronounce that correctly, Abida. Hi, good afternoon. Can you hear me? Hi,
I
Abida.
can
Good
hear
afternoon.
you. I was even about talking before, but I don't know. I
Oh,
was muted.
okay. You can go ahead then. I can hear you now.
Okay, I see. Budget is simply when there's particular amount of money that is being set aside, or a way that we set money aside for financial planning purpose or for planning purpose.
Okay. Yes, I love the word planning that you used there. Yes. So when you hear budget, it's basically planning, right? You're trying to plan for your expenses and your income over a particular period of time. Does anybody else want to try budget? Anyone? Please mute your mic. Gracious. Okay. Um, all right. So yeah, as I explained, budget is basically so it is a plan. It is a plan for your expenses and your income over a period of time. It could be a business. It could be a business. It could be the government. It anyone at all, right? So I'm sure like you follow news where you hear that the federal government is releasing the budget, like is releasing budget for a particular period. I'm sure you follow the news. They try to show you their incomes, their revenues that they'll be generating over a particular period, as well as give me. I'm trying to mute everyone here. Okay, and then they show you the expenses over a particular period and the revenue that they expect to generate as well. Okay, So when we talk about cash budgets, right, from the name, cash, you planning for your cash. Now let me explain how you have to do this. Normally, businesses are about generating profit. Yes. So when a business is profitable, doesn't necessarily mean it has the ability or it has the yes, it is able to meet its daily expenses. You see businesses that will generate large profits based on their annual report. You see that they have a lot of assets. They are solvent. Yes, let me use that word. But then they don't necessarily that doesn't necessarily mean that they have the ability to meet short-term and daily expenses, right? Doesn't mean they are able to they have short-term cash that is coming. It doesn't mean they are liquid. Yes, let me use liquid. Doesn't mean they are liquid enough. So that's where cash budgeting comes in. Cash budgeting or a cash budget is basically like a financial planning tool that is used to estimate the inflows and outflows of cash for a specific period. It is usually over a short period because you want to know how much cash you have at a particular period to spend. You want to know how much cash is coming in so that you are not so that you don't become illiquid or you don't like it doesn't lead to bankruptcy or it doesn't lead to a situation where you are disappointing some people that are expecting you to spend cash, right? Do you understand that? Is that fine? Can you still see my screen? And can you still hear me? Okay. All right. So cash budget, yeah, I've explained. Now, why do we prepare cash budgets? Right? We prepare it to know whether we should expect cash deficit or surplus. That means we prepare it to know whether at a particular period, could be monthly, could be quarterly, could be semi-annually, could be annually. You want to know whether at the end of that period or during that period you will be short on cash or you would have like you have excess cash. If you have excess cash, you want to know whether like you would have something to invest, or if it's going to be a deficit, you want to know whether you need to borrow more or you need to plan on how you are going to be able to like caution that shortfall that might happen. So that's why we prepare cash budget. So when you prepare cash budget, there's a timely identification of deficit and surplus in advance, so it will help you to plan and balance it. Now, cash budget helps to synchronize our receipts and payments, right? To ensure that all your operations are carried out as scheduled. So you probably have a plan as a business. You might probably have a plan on how you buy from your how you acquire goods and how you sell, right? So you want to be sure that your cash is in movement with this. Now, I want you to know that cash does not affect. Should I say it's yeah, it affects profit in a way, but like it is completely different. That's why we prepare the cash flow statement separate from our income statement, right? It is like an entire the when dealing with cash or when planning for cash planning for this plan for cash is completely different from planning for profit. I'll explain further. Now you need to know that there are some, should I say, yeah, there are some items, right? There are some incomes, there are some expenses that don't necessarily involve the movement of cash. So, for instance, let's talk about depreciation. When you talk, yes, depreciation is the wear and tear of goods of assets, right? So you buy an asset and then you say the next year it is not like the value has gone down, it is not the same as when you bought it, right? But then that like there is no physical movement of cash. There was no this yes, you are saying the value has gone down, but you did not, there is no measurement, there is no specific cash measurement of the amount of the value of money that went down from that asset. So depreciation, for instance, is a non-cash item. So when dealing with depreciation is an item that you treat when you are dealing with profits, not cash. So items that they don't necessarily involve the movement of cash, items that you cannot see, like you can, there is no physical cash. It is not like you're paying anything for them. You're not paying anybody for depreciation, right? You're not paying anybody for provision for doubts with it. You're just like making, yes, you are making provisions for them. You're certain, but they are not cash movements. I don't know if you understand me. Please, if you have any questions at any time, you can stop me and I'll go back to it and explain. But do you understand up to this extent? Do you understand why we prepare cash budgets? Do you understand that do you understand that planning for profit is different from planning for cash? And do you understand non-cash items that do not affect cash budgets? Anyone at all, please. If you have any question, please stop me before we go further. Do you have any questions? Can you still hear me? Hello.
Yes, we can hear you.
All right. Okay. So I will take your silence as not having any questions, and I will move on. Okay. Now, when preparing your cash budgets, you have about 3 or 4 steps. And the first thing is to gather your cash inflows, right? Where that is all the cash receipts that you would expect during that period that you are preparing the cash budget for. So it could be cash sales, like it could be cash sales. That means if you sell on, like if you don't sell on credit, right, and you receive your money immediately, cash sales will be part of your cash inflows. But if you sell on credit, whenever debtors pay you the money, that means the collection of customer debts, that would make part of your cash inflows, right? If you are the if it is a company, not a partnership or a sole proprietorship, it's a company that sells shares or that issues debentures. When you do that and those shareholders pay money, right, for the issue of shares, it can like it constitutes a cash inflow. And interest and dividend received, if you're the type that if you're the company if you're a company or a business that invests money in other businesses, you might receive dividend from that. Or if you loan out money to other businesses or individuals, you might receive interest on it in cash or bank transactions, right? So that also constitutes cash inflows. Or if you sell assets, right? You sell assets, or even if you borrow money, yes, that's the same as issuing debentures. So when you borrow money from a bank, you take a loan or an overdraft, the money that they give to you, that cash constitutes a cash inflow. Now, as for then you take after taking into account all your cash inflows, you talk about your cash payments or your cash outflows. Now, these are cash that like you pay out, right? It could be to suppliers. It could be payments to suppliers after you bought goods on credit, or it could be payments to suppliers when you buy cash, when you make cash purchases, right? Could also be when some shareholders they don't want to be shareholders anymore. They say they want to redeem their debentures or the shares that they have in your company, so you have to pay them cash, right, for that. Then, or if you yes, if you have to pay your shareholders or your debenture holders interest and dividend, you have to do it with cash, right? So these are things that you need cash for. These are expenses that you need to be able to meet on a short-term basis. You could also want to purchase fixed assets or for general expenses, making normal purchases, paying for electricity bill, and all of that daily expenses that a business incurs. Now, as I mentioned earlier, it is important to note that non-cash expenses such as depreciation, provision for doubtful debts are not treated in the cash budget. So if they do not involve actual inflow of cash, they are called yeah, they are non-cash expenses. So the timing of this cash, yes, and then the timing of cash flows is very important, right? So if, for instance, you purchase goods in January on credit and you are given a 1 month grace period payback, meaning you have to pay back in February. When you when you pay the money, you don't record it as a cash outflow for January, right? You don't, the principle of accrual does not apply here. The principle of saying, oh, it is when you make a purchase, or when, yes, it is when you earn a sale that you record it. No, it does not apply here. It is when you pay money, it is when there is actual movement of cash that you take account for it. So if you purchase goods in January on credit and you're paying in February, that cash outflow is cash outflow for February, not January. Do you understand? Okay, I will take your silence as yes. Please stop me at any time if you have any questions. Now, the timing of various cash flows is of great importance. I have mentioned that. Now, after taking into account your inflows and outflows, you want to ascertain the difference between that. If your inflow is greater than your outflow, that means you have a surplus. That means you received more cash than you spent during the period. And if you have that means if your outflow is greater than your inflow, it means you have a deficit. That means you spent more cash than you received during the period, right? And then the final stage is after getting your net cash flow, that is your surplus or deficit. If there was a balance at the beginning of that period, you add it or subtract it to the closing net balance, so that you get your final cash balance at the end of the period. It's just like if you had 500 naira at the beginning of the period, and after calculating the inflow and outflow of cash during the period, you realize that everything left you with 1,500 naira as a surplus. You add to that 500 you had at the beginning. So at the end of the period, you have 2,000 naira. Is that fine? Do you understand? Please just send a chat or send a reaction if you understand
Yeah,
this point. Can we
but
proceed to
you're kind of fast.
okay? I am going to slow down.
Can you just slow down?
Thank you
Thank
for
you.
calling that out. Thank you. Okay, but do you understand to this point? So can we move to the illustration? We are going to be doing the illustration together. So I'm going to need you people to calculate with me and send the answers as we go. Okay. So we are going to look at the question first, and after looking at the question, we'll try to solve it. Okay. Just so that I'll engage other people in the class, I'm going to call someone to, read this for us. I want to know that there are other people in the class. So let me see. I have heard you. Okay, let's go with Gracious. Hi, good afternoon. Please unmute the mic if you can.
Yes, hello, good afternoon.
Good afternoon. Can you please read for us? Thank you. Okay.
Okay.
Can you see my screen?
Yes, I can see your screen.
All right. Let's go.
Okay. Zivani Company Limited
Yes.
produces household items for the domestic market. In the previous year, the company suffered theft in its offices, losing all cash on hand in the process. On the date of the theft, the company had an overdraft balance of 125 million with its bankers. Due to the good working relationship that exists between the company and its bankers, a short-term loan of 500 million will be granted to the company on the 31st December 2022 on the following terms. Should I go ahead? Facility,
Yes.
short-term loan, duration 1 year, interest 27.5% per annum, simple interest,
Okay.
payments, principal payments in four equal quarterly installments, interest payable monthly in arrears.
All right. You can stop there then. Don't worry. Thank you very much, Gracious. Thank you. Okay. Now, let's look at the additional information. So, we have been given information on how much they had at the beginning and the fact that they took a loan, right? So, at the beginning of the period, we're going to assume at the end of the last period, that 1st December 2022, they had 125 million deficit, meaning they were owing 120. So basically 120 minus 125 million, right? And then because they had a good relationship with the bank, maybe this was an irregular occurrence for them, they were granted a loan of 500 million, right? Okay. Now, um, this is the this like we are now giving terms of the loan. That is, it is a short-term loan. They have to pay within a year. So if they were granted the loan 31st December 2022, they have to 31st December 2023 to pay it back, right? And then of course they're going to pay interest on the loan, simple interest. We have been given the percentage, and we have been told that the principal is to be paid in four equal quarterly installments. That is, they have to pay in March, they have to pay in June, at the end of March, June, September, and December, right? And then the interest is payable monthly in arrears. So that means after calculating the interest, right, you first calculate the interest using the information that we've been given, calculate the interest that they are supposed to pay on the loan, and then they are supposed to pay monthly in arrears. That means yes, after getting the interest payment or interest that their interest payable, we divide it by 12 to get their monthly interest that they have to pay. But then they can pay in arrears. So that means they can pay they are going to pay January's interest in February, February's interest in March, March interest in April, and so on. Do you understand? Is that fine? Like I just want to quickly go over this, explain it, and then we'll start from the top and try to work it out together. Now let's look at the additional information. They've been given, we are given,
Sorry,
yes,
can you hear me?
yes, I can hear you.
I'm sorry. Can you explain what you mean by that interest payable again? Can you
Okay,
explain what you say? But not that clear.
okay, all right. Let me go back. So they were given a loan of 500 million, right? And on yes, that's the way banks give out loan. You always have to pay interest. I don't know if you're familiar with simple interest, right? You know how simple interest work. You borrow money, you got that money that you are giving. That's the 500 million in this case. Is called the principal. Do you understand? Are you with me?
Yes.
Okay, so the 500 million is the principal, but then you're supposed to calculate interest that you're going to pay on that 500 million. So it's like saying that 500 million that they gave you is not the 500 million you're going to pay back. You're going to pay more than 500 million, obviously, but they are saying you are going to pay the 500 million separately on different terms, and you're going to pay the interest on different terms. So let me put it this way for you. Let me use another figure. So let's say, for instance, they are borrowing you 1 million, and you're supposed to pay 1,100,000. Do you understand? So they are saying that 1,100,000 they are paying now. How much is your interest when you listen? If you borrowed 1 million and you're paying 1,100,000, how much is your interest there, or how much is the interest you're paying back? Are you with me?
I think 100. I forgot. I didn't get to this. Sorry.
Yes, hundred
Ten
thousand. You have to
percent,
pay.
right?
That'll be
Yeah,
100.
exactly. So if they are borrowing you 1 million to pay back 1,100,000, it means you are paying interest of 100,000, right? Do you understand that? Are you with me?
Yes, ma'am. Yes, ma'am.
All right. So now the terms of the loan now that they are now giving you is that okay, you are paying me interest of 100,000 in addition to the 1 million that you are supposed to repay. So you are going to pay these two. You are going to treat them as two separate payments. You pay me interest separately, and you pay me the actual amount separately. When you want to pay that 1 million, you can pay me twice, right, over 1 year. So you can pay me at the end of September and at the end of December. Do you get? And then when you want to pay that 100,000, which is interest, you'll be paying me 10,000 each month till you finish paying it. I don't know if you understand me.
Okay, now I get.
Do you understand it now?
Yes, please.
Okay, can you use another figure or
Sorry,
another example to explain it if you understand it?
sorry. Before he
Okay,
Okay.
explains it,
My,
before
okay,
he
sorry.
explains it, yeah,
Okay,
before he explains it, let me
yeah,
let me reword what you said in the way I understand it. Firstly, are you using this
okay.
example? This example you are using, is it together with the terms that are written in this illustration?
What'd you say?
The example you gave, is it following the terms that are in this illustration?
Not
Apart
strictly,
from the
no.
interest rate,
No, no, not strictly. It's not following this strictly. Like it's just
okay, is
following
the
this.
repayment the same?
Yeah, let's believe that the repayment is the same.
So
Yeah.
now, one part that I don't understand is the part where the repayment is saying principal payment is in four equal quarterly installments, and
Okay.
and and you said the interest can be paid every month. So is that does that mean that the interest can be paid every month, but the 1 million
Yes.
naira you can split it into four?
Yeah.
Okay. So the
Exactly.
interest every month, but the 1 million every you can every three months
Three
in a year.
months. Exactly. Yes.
Okay, okay. Thank you.
Okay. So do you want to go ahead now and explain how you understand it? Ah, are you still there?
was it me
Hello.
or?
Yes.
Okay, I thought she was the one that was explaining. So what I understand here is that, for example, if you are given a loan of let's say 2 million naira and you are being to be paid an interest of 20%, meaning that you'll be paid I say you are giving 2 million, 20 million, right? So you'll be paid uh 40, let's just say 10% interest. So that is 200,000 naira. So
Yes.
this part that says we can be paying it every quarterly. So, and for instance, the person was given the loan by December. So quarterly payment is that. every 3 months.
Yes.
That is by March, June. So once paid by then. So, but the interest can be paid in little time, not just the same time of the
Principal.
like not the same time that you are paying the loan itself. I think
Yes.
that's what you
Exactly.
mean.
Yes. Exactly.
All right.
So you're going to treat them as if they are two separate payments. Yeah. So do we all understand now? Okay. I will take your silence as yes. Now, let's talk about the production or this. Now, this is we've been giving loan and we've been giving the balance that they had at the beginning of the period. So let's go to their let's try to get their sales and purchases. Now, every month we've been giving how much they produce every month, right? Sorry about this, right? So, okay, I don't know why this. Let me bring it down so that it's be on the same page. Sorry. Okay. I want to make the table. Yes. I'll make it one. Okay. So November, this is November 2022. The period we are dealing with is 2023. This is November 2022. So they gave us the production units from November 2022 up till June 2023. So these are the number of units. These are in units that will produce every month. Now let's see why we were giving November to June. First, they said raw material used for production costs 10,000 euros per unit. 25% of this sum is paid in the same month as production, and the balance of 75% in the month following production. Okay, so basically, let's take November now, for instance. You have produced 5,000 units, and each unit costs 10,000 euros. Let me just say 10. Let's just use 10 here for simplicity's sake. So each unit, each let me just use 10,000. So each unit costs 10,000 euros per unit, right? They're now saying if that means if you buy it in November, if we purchase these raw materials in November for 5,000 units, we are not going to pay the entire this thing, amount that we are supposed to pay. Right? We're not going to pay the entire 10,000. So on each unit now, if you buy 5,000 units, on each unit you're supposed to pay 10,000. But in the month of November, you're not supposed to pay 10,000. You can pay 25% of that 10,000. And then the following month, which is December, you'll be paying 75%. So for instance, one unit costs 10,000 per unit, right? In the month that you buy it, you pay 2,500, and in the following month, you pay 7,500. I don't know if you get it. Do you understand that? And we're still going to walk through all of this, or do you want me to just walk it as we go so that like we can do the calculation and you see what I'm saying? Since like let's visualize it. Should we do that instead? Because I was going to explain and then have us visualize it, but then do you want us to just go straight to visualizing it? Please, can someone confirm if you can
Yes,
hear me
please.
or just give me a response? All right. Okay, so let's try
Do
to.
it first.
Okay, I should explain it first. Okay.
Yes.
So basically, they are saying when you buy raw materials, you can pay it in two installments. One, you pay the first installment as you buy it, and then you pay the rest the following month. You understand? So as you buy it, you are expected to pay 25% of the amount of what you bought. And then the following month you pay the rest. It's as simple as that. So in November, whatever you buy, you pay 25% of the amount you're supposed to pay for everything. And then the following month, you pay the remaining 75%. That's December. Do you understand? Let's do an example here. So basically what they are saying is that in November, you're only going to be paying 25%. In December, you'll be paying 75% of what you bought in November, as well as 25% of what you bought in December. Do you understand that? Let's try to visualize this. Okay. So this is the month is November. Sorry. Okay. The month is November. You bought goods worth, or you bought 5,000 units, and you bought it at 25, sorry, 10,000 euros per unit. Sorry, let me get my calculator there. Okay. So if you bought 10,000, sorry, 5,000 units, I mean, they are supposed to pay 50 million. I'm just going to write it in million. So whatever is here, let's assume it is a million. So you're just going to pay in million. Let me put the M there so that. Okay. So you have 50 million here, 50 million euros here, right? And then in the month of November, you are going to pay. Are you with me? So in the month of November, you are going to pay 25% of that 50 million, which is 12,500,000. Are you with me?
Yes.
All right. And then the remaining 75%, the remaining 75%, you are going to pay it in December. That is 37,500,000. Please ask me questions if you don't understand this part here. Let me try to bring the table
I
down.
don't understand.
Okay. Okay. Let me start. I'm going to start from the beginning again. Let me try to bring the
But we understand already. It's not that difficult. No.
let me just go over it again. I'm going to try to start from. Let me try to make sure that the table is in one place so that it will be easier to understand. Okay. Please forgive my laptop here. We're having problems. Okay. Okay. Yeah. So the table is together now. So in November, you bought 5,000 units, right? And that 5,000 units cost 50 million euros. So in the month of November, you're only supposed to pay 25% of that 50 million euros, which is 12.5 million, right? And then the remaining 75%, which is 7.5 million, you're supposed to pay it in December. So do you understand? Seeing it as one like this. Is it
Yeah,
clearer?
yeah, yeah. I wasn't following the other time because network glitched. That's why.
Oh, okay, okay. I'm very sorry about that. Okay, so I'm coming out to the question. Okay, no, let's just go back. So I can, since we understand how raw materials work, I guess we'll come back and complete the table. But I just wanted to explain how raw materials work. We'll fill in the table later. So now that's raw materials. For direct labor, it costs 1,000 naira, after 1,000 euro per unit, payable in the same month as production. That means here you are not separating anything. They are not giving you on credit. So if you produce, if your production is 500 million, you're supposed to pay that 500 million that month. Do you understand? You're not taking anything to the following month. That's for direct labor. While for variable expenses, which is estimated at 6,000 euros per unit, 50% of the variable expenses are payable in the same month as production, while the balance, so just like raw materials, for variable expenses, you're also allowed to divide it into two installments. You pay 50%. The only difference is the percentage. So you pay 50% this month and you pay 50% the same month. That's fine. Are we clear here?
Yes.
All right.
Yes, we are.
Okay. Thank you very much. Now, sales. Okay. Now, every month you are expected to sell. These are the units you're expected to sell per month. and just like you are going to be selling them at 250,000 euros per unit. Wow, that's much. Okay. Now, they are selling 250,000 euros. Sorry, let me just confirm if that question is correct. I want to be sure that it's actually 250,000 euros.
Sorry, the number three additional information. Is it about
Yeah,
purchases? Right? I didn't read that part.
it is about direct labor and variable expenses.
Okay. No, I mean, what you have at number four here, you write sales at 250,000 pounds. Is it this, what do we have at number three?
Okay, at number three, it is 1,000 euros per unit.
No,
1,000
no, no,
euros
not
per.
that one, not that one. The highlighted one at the bottom before the tabular form, before the table.
Which one?
Please go up a bit.
Okay, up.
Please go up. I've not seen it.
Okay, are you sure it is here? Sorry.
Okay.
Oh, let me come back to the question. Okay, I see. I think I see what you're talking about now. Okay, have you seen what you're looking for, or should I keep going
No,
up?
you went down, not up. You are
Oh,
almost like you went down, not up.
okay. So, what exactly do you want to see?
I wanted to know what is in that number three that you're talking about the raw material. Was it all about purchases? Because I'm seeing
There is,
sales, I didn't see any purchases,
okay, this
so I
is it.
was confused.
Are you seeing it now?
Yeah.
Okay. I just want to confirm that 250,000 euros is correct. I have the question here so that it will not be solving the wrong thing. Um, okay. Sales. Okay, it is correct. 250,000 euros. Okay. Now, for sales, we are told that all sales are on credit and debtors take an average credit period of 2 months. So that means if you buy in October, you can pay in December. You pay 2 months after, right? For every person. You don't have to pay anything immediately you buy it. You can, but the total payment, you have to pay it at once, but that's in 2 months' time. So do you understand? So if you are buying in October, you pay in December. If you are buying in November, you pay in January and so on like that. Do you understand? Then we have fixed overheads, which are 18 million per month and are payable each month. This one is straightforward. You just pay 18 million every month as fixed overhead. And then a new packaging equipment costing 84 million is to be paid for equally in March and September 2023. So equally, you are buying it 84 million and you have to pay it twice. You have to pay for it in two installments. So 84 million in two installments is 42 million two times, right? You are supposed to pay in March and September 2023. So in March, you pay 42 million, and in September, you pay the remaining 42 million. Is that fine? Now, we are told that it has a useful life of 5 years and a straight line depreciation policy. The depreciation of this equipment has not been included in the fixed overhead above. Can somebody like attempt this? Can you explain how to treat this depreciation? I need somebody to attempt this.
I think
Okay.
if we are having that, that means using the straight line depreciation, we have to, as normal way we reduce depreciation, that is the minus scrap value with the cost. I mean, cost minus scrap value then with the years divided by the years. That's the amount we are going to put for the fixed overhead.
Okay. So
Amount
you're
that we put for the fixed overhead.
asking we are going to like calculate this depreciation and add it to fixed overhead.
Pardon?
Like, are you saying we are going to calculate the depreciation and then we are going to add it to fixed overhead?
No, we are still going to subtract it. We're going to subtract it.
Well, they said that it has not been included.
Yes, that means we're going to subtract it. We're going to calculate and subtract it from it. I think.
Okay. Does anybody else want to try? Does anybody else want to try? So that if people are not okay, don't want to volunteer, no volunteer. Okay, I'm just going to take it then. So Adibin, thank you. I love the attempt. But Adibin, they said it has been included. That's when you remove it because we are not supposed to add depreciation when you are dealing with cash. But because they said it has not been included, that means they just gave this information, like they just gave it to confuse us. Do you understand? They just gave it to confuse the candidates or to confuse the person that is solving the question. This, like, we don't need to treat it at all since it has not been included. I mean, they said it has been included in fixed overhead. Then yes, you calculate it and then you divide it by 12 and then you remove it from the 18 million every month. But because they said it has not been included, that means they probably calculated it or whatever, but they did not even add it at all. So we are also not supposed to do anything. You're not supposed to subtract it. You're not supposed to add it. You're not supposed to do anything. Just leave it. It has not been included. That means it is not anywhere in the figures that we are giving, right? So we don't need to treat it. It has not affected us, and we don't need to like make it affect us in any way because it is not a cash transaction. Do you understand that now?
Yes, ma. Thank you for that for explaining.
Oh, thank you very much for attending. Now, rent income of 6 million per quarter is to be received at the end of each quarter. Because whenever you see things like, make sure you note them very well. It is rent income, not an expense. It is an income, not an expense. So it is going to we are the one receiving rent. Probably have a property or something. So we are the one receiving rent, not paying it. So let's go down to do our workings, and then we'll try to solve the question. Hopefully this thing doesn't die by the time. Okay, let's start with sales. I guess let's do sales first. How many units each month? So I'm just going to fill in the units. So in October, it's 200 units. Um, November, it's a 600 units. December, 600 units. Um, okay. January, 768. February, 720. March, 640. April, 500. May, another 500. And June, also 500. Okay. Please forgive my laptop. Oh. Okay. So each month, let's calculate the value each month. 250,000. 250 times 200. So this is 50 million. Following month is 600 times 250. 150 million. Following month is the same. Following month is 768 times 250. Please, you can calculate this with me so that we'll be sure not to make any mistake anywhere. This is 192 million. The following month is 720,000 times 250, which is 180 million. Following month is 640, 100 million. And 500 times 250, 125 million. Okay. Now, um, they said we have to pay 2 months lag, right? We have to pay after 2 months. So this one that we purchased or that we sold in October, we are supposed to receive it in December. So in December, you are receiving 50 million. In January, you are receiving 150 million. Same thing in February. In March, you're receiving 192 million. Please tell me if you don't understand
Please,
that
how are
anything.
you getting for the receipt? How are you getting those figures? How did you get 50 million and the rest?
You are multiplying by sales per unit, which is 250,000 per unit. This is it here. So sales per unit, 250,000 by 200 units. Do you get it?
Yes, yes. The receipt, how are you getting the receipt?
Okay, they said we have to pay 2 months after you sold them, or you have to receive it 2 months after. So if you sold in October, that means you are receiving it in December. Do you understand? If you sold in November, you are receiving 2 months, which is 2 months later, which is January. Do you get it?
Okay.
Yeah. So you just leave. That's why we left two boxes here. So the one you sold in October, you're receiving it in December. The one in November, you're receiving it in January. The one in December, you're receiving it in February. The one for January is March. The one for February, now you'll be receiving it in April, which is
Okay.
180 million. Yes. Thank you.
Thank you.
Okay. And then in May, you receive 160 million from March. And then in June, you receive April's one, which is 125 million. So that is, we've gotten our sales figures. We've gotten all our sales figures. We can just take them now and then we can go and put them in our cash budget, which we are preparing. Okay. So this is our cash budget table. So you have your receipts. This is it. You can just paste it here. And then, okay, yes. So let's go and do the rest. Let's work on the rest. Mhm. Okay. So our second working now is raw material. Okay. Now for our raw material, let's fill in the production each month. So November, we've already treated November. December, 6,000 units. January is 5,000 units. February is 8,000 units. March, 1,000 units. April is 5,000 units. May is also 5,000 units. June is 6,000 units. Okay. Now, for our purchases, we are paying 10,000 per unit. So we've already calculated November's own. We said 10,000 times 5,000 units is 50 million. So 10,000, this should be 60 million. This is also 50 million. There is 80 million. Please stop at any time if you have any question or if you don't like you're not following what I am doing. For April, it is also 50 million. It is 50 million, and June is 60 million. Okay. Okay. So now 25% is supposed to be paid in the months that like in the current month, right? So in December you are paying 25% of 60 million, which is 15 million. In January, how much are you paying? You're paying wait, I'm sorry, I want to check something. Give me a second. Okay, this was from December to June. We were only supposed to copy from January to June. Yeah. Okay. Sorry about that. I just want to, please, are we still together?
I'm
Yes.
lost. So
Okay, where are you? Where should we go back to, please? Where should we go back
scroll
to?
down. The purchases are 10,000 euros per unit. That part, what I don't understand.
Okay, I'm coming. I will go back there now. Let me just quickly
Okay.
correct. I want to correct the sales so that I'll be sure we have the right thing there.
So why are you skipping the 50 million? Why are you starting from January?
Because they asked us to prepare from January to June. The
Okay.
cash, yes, the cash budget is from January to June. We are not like we are not concerned with December.
Okay. Okay.
It is supposed to be from. I'm sorry. Okay. Now it's so you said you were lost on the raw material side. So we have been given the production per unit, and we are told that raw materials cost 10,000 per unit. Are you still with me?
Yes.
Okay, so we are told that raw materials cost 10,000 per unit, right? So you are supposed to multiply this 10,000 per unit by the number of units that you are producing in the month. Do you understand?
Okay.
Yeah, so when you multiply for November, everything costs them the total. When you multiply 10,000 by 5,000, get 50 million. Do you understand?
Okay. Okay. Yeah. Yeah. Yeah.
Yes. Yeah, so like that was how I got all the figures here. You just multiply each of them, that's 6,000, 5,000. Multiply them by this 10,000 units, and you get your answer. Is that fine?
Yeah.
Okay, so now going to the next column, we are told that we are supposed to pay 25 million, 25% of whatever we are supposed to pay. So, for instance, now in November, we are supposed to pay 50 million, but we were told that, okay, in that particular month, just pay 25%, which is 12.5 million. That was how we got this 12.5 million here. Do you understand? And then you do the same for each of the other months. So in December now, when you bought goods worth 60 million, you're supposed to pay 25 million immediately, and then you pay the rest the following month. So we are paying 15 million, which is 25% of 60 million in December for the goods we bought. Do you understand? Hello, are you with me?
Yes.
All right.
Yes. Yeah.
Okay, so let's just fill in the 25% for each of the remaining months. So this is also 12.5 million. So okay. 5 times 8 million. Here is 20 million. Okay. This is also 15 million. 4.5 million. That's 12.5 million. Okay. Now this is where it might get tricky. So as I have explained when we were doing November's own, as I have explained, sorry, when I was doing November's own, I said you pay 25% in current month, that is in November, you pay 12.5 million. But in December, you pay the rest. So this 75% of what you bought in November, which is 37.5 million, you pay it in December. Do you understand?
No, please.
Okay. So let me use other figures then. Let me use simple figures. So you bought something worth 1,000 naira in January, and you are told that you can pay 25% of it. What is 25% of 1,000 naira? Are you with me?
250.
250. Thank you. So you pay 250 immediately, and you pay the rest the following month, which the rest, which is 750, you pay the following month. So do you understand that?
Yes.
So coming back to the example, if you have to use the example now, in November, you bought goods worth 50 million. This is it. You bought goods worth 50 million. And then they said you can pay 25 million. I'm sorry, well, 25% immediately. 25% of that 50 million. Pay it immediately, which is why you paid 12.5 million immediately. But then they are now saying the remaining 75%. That means the balance after paying that 12.5 million, you make sure you pay it the following month in addition to whatever you are paying. You understand? So in December, after buying your goods worth 60 million, and you have paid, okay, you bought goods worth 60 million, you paid 15 million, which is 20% of it. You're not supposed to pay the balance from November also, which is 37.5 million. Do you understand?
Yes.
Okay, so in the following month, so like that means in each month you're paying for two things. You're paying 25% of what you bought that month and 75% of the previous month. Do you get? So for December, you're paying 15 million for December, and you're paying the
Sorry.
balance of November. Sorry, yeah, I'm with
Okay.
you.
I think that's what you're about to say. I wanted to ask, um, 75%, is it on, using December as an example now, is
Yeah,
75% going to be on 60 million or 15 million?
it's on 50 million. It's on
Or on
50.
the 50?
Yeah, 50 for November.
Okay. Okay.
50 for November. You are using the purchases for November. So 50 for November, right? And
So, wait, sorry. So
yeah,
this 75% is for the previous month.
exactly. Exactly.
Okay.
So can you use, okay, let me see if you understand. Can you, what do you think we are paying in that January now? This 75% to be on how much?
60 million.
60 million. Thank you. Exactly.
Okay.
That, is anybody else confused? Okay.
So
So,
does it mean that for 60 million now, the 75% will be 45 million?
exactly. Yes.
Okay.
So in yes, so January's own now on that 75%, you have 45 there. And then and so on. So for February now, you are going to be doing 75% on 50 million, which is for January, like that. So you have 37.5 million here. And then this is going to be 75% of 80 million for March now. So you have 60 million here. Five, then That's 7.5. Do we understand now? Is this clear?
Yes.
Okay. So we can get our total payment for each month now. So you just add up this 15 million plus that's like you add up the second and third rows. Is it second and third or third and fourth rows? So here we'll have 15 million plus 37.5 million, which is going to be 52.5. Okay, this is going to be 12 points. Sorry, 12.5 plus 45 million. So this will be
57.5 million.
yes, thank you very much.
So there's no need to add the first one.
Yes, you're not adding the first one. You're only adding what you paid in the current month and the 75% you paid for last month. That first one is just to give us a guide on the like percentage that we're calculating. Do you understand?
Okay.
Yeah.
Just the 25 and the 75%.
Exactly.
Okay.
Yeah.
Million.
75 million.
Yeah. This is okay, this is also 57.5.
7.9.
Should be 15 million.
60 million.
Okay, 16. Is it 16?
Yeah.
Oh,
The
sorry.
last one.
Just sorry. Ah, okay, this is 15 million. Please
50 million.
calculate. Yes, 50. And then the last one is 52 points. Okay, so that's all for raw materials. So we can. So this one also starts from December, so we should be careful when copying it. So we are going to copy from January to June, since that's what we need. Okay, and that is raw materials, right? Working to. Okay. All right. Oh God. Okay. Sorry. Pardon me. Give me a second. Control. Okay. Now, let's go and work on variable expenses now. Okay. So for variable expenses, we have the same, we're using the same production units as we did for materials. So we also have 5,000 in November, 6,000 December, then 5,000 again, 8,000, 6,000, 1,000, 1,000 again, and 6,000. Okay. So here we have 6,000 per unit. 6,000 per unit. So let's just calculate what it is worth. Are you with me? So here we are paying 6,000 per unit for variable expenses. The one we were calculating before was raw materials. This is variable expense. So for variable expenses, we are paying 6,000 per unit. So on 5,000 units for November, we have paid 30 million. Okay. On 6,000, you are supposed to pay 36 million.
36
Thank you very much. So this is also 30 million. And this
48.
will be, okay, that's it. Another 30. And another 30. Another 30. And 30. Thank you. And this one, now what they are telling us here is, unlike this, it is just like that one where we are paying in two installments, 50%, but here we are doing 50-50 instead of 25-75. So in November now, out of this 30 million, you pay 15 million the first month. So in each month, you're paying half. So here is 18 million, 15 million, then 24, 18. So this is actually like it is very simple and straightforward. You just have to yes, you just have to like follow it step by step, and you like as long as you don't make any mistake in calculation or any mistake in like posting what you're supposed to post to the right place, you'll be fine. Really. Now, okay, can anybody attempt what is supposed to be here? Like that is December under the second 50%.
The same amount. The same amount. This is since it is 50%.
Yeah, but this 50%, the second one, it is not on December's own, it is on
It will be
November's own.
15 million.
Yes, thank you. So it is going to be 15 million. Okay. So how much is going to be in January?
15 million.
Exactly. Thank you. And
Please,
then
I don't understand. 50% is on which of them?
just like we did for raw materials, here to the 50%, this second 50% now for December's own, it is on 30 million for November. Do you
Okay.
understand? Yeah.
Yes.
So it is the same thing. We are going in areas here. So sorry. Okay. So for February now, it's going to be on January's own, which is 30 million. So that will be another 15 million. And then for March, so March own is going to be how much now? How much is March going to be? Are you with me?
Yes.
That's 24 million.
Yes, thank you. I wanted to be sure you are with me. And then April is going to be 18 million. May is going to be 15 million. And June is also going to be 15. Thank you. So we can add everything up now. Let's just start adding from where we need. So we need from January to June. So we can just start adding from January and June. So we're adding this 15 million plus this to this 18 million. So how much is that?
33.
33 million. This is 24 plus 15. This is
Okay, I think you're already
39.
adding the interest, right? Not the amount that was paid.
yeah. No, this is not like this is not interest. This is not loan now. This is purchases. So we are not adding listen, we're not adding the total amount here. We're adding the installments that were paid. Are you with me?
Yes, ma'am.
Okay. Okay.
So the reason why you're not starting from December is because we don't need the total for
Yeah,
December.
exactly. We are only preparing for January to June.
Okay.
So this is 39 million. This is 18 to 24. That should be 42, I guess. Yes. Then 18, 15, another 33 million. 15, that should be 30 million. And then another 33 million. Okay. So we have everything for material. Sorry, for labor now. I'm sorry, variable expenses. This is variable expenses. Okay. Oh my god.
Sorry about that.
Yeah, it's my network. Sorry. Can you still see my screen? I don't know what is wrong.
It's blank actually.
No, we can see it.
Yeah, my network is going off. Okay, please give me a second. Let me leave and join again. Sorry about this.
No problem.
Can I see something? What is going on?
Yeah, please go ahead.
Okay, so the initial question you gave us was about cash budget. So what you're trying to do here, we're trying to prepare a cash budget, and you gave us some additional information, and those additional information
Yes,
contains sales, raw material, direct labor. So the solution that you give, some of the like not to waste time, you already created some of the tabular form. So that's
yes,
just be putting in the number, right?
exactly.
Then so you now started by you started with sales. So the figure that was given in the question in sales, like 5,000, 6,000, and the like, you
Yeah,
then fill it there. You fill it. So after you have filled it, you now, according to the question, it says about 250,000 euro per
unit.
unit. So we
Yes,
calculated that one. We
yes,
calculated that. So after we calculated that, we now calculated the interest.
yes.
So after we calculated
It's
the
not
interest,
interest. Yeah, there is no interest on sales. For sales, you are dealing with installmental payments, not like purchases. So what we are saying here is that for sales now, the amount you sell in each month, you are not receiving it immediately. That's what we calculated in sales. So if you sold like what you sell in each month, you are receiving it 2 months later.
yeah,
Yeah, so that's
that
what
was
we did in sales. Yeah,
30% and 70%. So,
exactly.
so and that's sorry, are you talking?
Yeah, please go ahead.
Okay, so that regarding the sales, I've forgotten what the major reason why you calculated that is because to know the inflow, because as you said, cash budget is all about knowing your inflow and your outflow, right?
Yes,
So
yes,
that means you calculated the sales and posted it at the inflow, while the purchases and direct labor on the outflow, right?
yes.
All right.
Okay.
That's
That's
what
fine.
I just want to confirm.
Okay, okay. Yeah, up to speed with us. Okay. I'm having trouble sharing my screen. I just want to work on that and
Yep.
I'll get to you immediately. Mhm. So sorry about this.
No problem.
Can you see my screen now?
Yeah.
Yes.
Okay. All right. Just going to. Okay. Okay, let me record the meeting so that we have something for later. Okay, I am recording the meeting. Okay, so where did we stop? Okay, so we are calculating. I think we finished calculating variable expenses, right? Are you with me?
Yes.
Okay.
Yes, we are with you.
Okay. So we finished calculating variable expenses, and we're just going to paste that in our table. Okay. Now, let's go to our next working. Now, for our next working, this one is straightforward. According to our additional information on direct labor, we are told that where is it? Okay, direct labor which cost 1,000 euros per unit are payable in the same month as production. So it means here there is nothing like installments or anything. So once we buy, we just once we buy, we pay in that month. You don't have to. There's nothing like installments. You're not taking anything to the following month. So let's just go. Let's copy the figures in our table as well. And this is production units. So we have the same thing. So we have 5,000 units. Have 6,000 units, if I'm not wrong. Then 5,000, 8,000, 8,000. Okay, then 6,000. Then I think, okay, 5,000, 5,000. There.
Me is 5,000.
My April
Yeah,
is sorry, 5.
Thank
June
you.
is 6,000.
Yeah.
Okay.
So now labor cost is 1,000 per unit, right? So you are multiplying 5,000 by 1,000. So which is this is just going to be 5 million. Yes, right?
Yes, ma'am.
So this is going to be
Yeah,
6 million,
6.
5, 8, 6. I don't think there is any need to even write the total because they are the same thing. Like you're not, yeah, there is no installments for this one. Okay. So do we get it up to this point?
Yes, ma'am.
Okay.
yeah,
Yeah. So here we can just copy what we need from January to December. Okay.
Are you sure you go outside today?
Okay. And that is direct labor, right? So you can just paste it. Thank you. And then okay. So now let's look at our question. We are told that we've dealt with raw materials. Or let's start from the beginning actually. So we are told that on the date of the theft, the company had an overdraft balance of 125 million with its banker. So as at the beginning of or as at the start of when we were supposed to prepare this budget, we had 125 million deficit with our bank. And then they agreed to loan us 500 million, right? This 500 million, it was granted to us on 31st December 2022. So we are just going to assume it came in January. So we're going to come to January and we're going to write that we received a loan of
When you give me the
500
number, I use my phone.
million. Are you with me?
Yes, ma'am.
yeah.
Yes,
All right. So you received a loan of 500 million in January. Now, in okay, going forward, let's calculate our interest on this loan. Now we are told that it is a short-term loan. The duration is 1 year, and you have to pay a 27.5% interest per annum, simple interest. So let's calculate our interest on this 27.5% interest. So our interest on loan is going to be, how much is our loan? 500 million, right?
Yes, ma'am.
Yes.
Multiplied by
Yeah.
500 million multiplied by,
That is 137.5.
yes, 137.5 million. Since it is 1 year, and then you multiply it by 27.5. Sorry, I just want to make sure we have everything
Thanks.
in the material. Okay, so that's going to be, how much did you call it? You said 37.
137.
Yes.
137.5.
0.5.
Yes. So now we want to divide this. So you have to divide this by 12 since we are paying monthly, right? They said they have agreed that we can pay monthly. So 137.5 million now divided by 12 should give you something around 11.5 million if you approximate. Are you with me?
Yes. Yes,
Okay,
ma'am.
so
It's going
if
to
you
be what you just said.
so if you approximate, what is your interest? That should be 11.5, right?
Yes.
Okay,
Yes.
so let's just go straight to our table and key in 11.5 million. So now remember, they said we can pay in arrears. We can pay in arrears. So that means in January, they are not expecting us to pay any interest. They're not expecting us to pay. So like we are supposed to pay, yes, we are supposed to pay from January to December, but they said January own can come in February, February own can come in March, March own can come in April. So in January now, you're going to pay January's own 7.5 million in February. You're going to pay February's own in March. Do you understand what I'm doing here?
Please, how did you
Yes,
get
ma'am.
the
Yes, I
11.5?
understand, but why you put 11.5?
Oh, that's the interest.
Interest is 137.5.
That is annual interest. They said we should pay.
Divided by 12.
So you have to
Divided by 12,
Okay.
it's not 11.
Yeah.
11. How did you approximate it to
Approximate.
11.5?
Approximate.
Yeah, we approximated it to 11.5. I'm guessing, unless that is 137.5 million, right? Divided by 12. Yeah, that's 11.45. So that was why we approximated to 11.5 million. Are you
Okay.
with me?
Yes.
Yeah.
Yes, I understand.
Okay. So and then they said pay monthly in arrears. If you look at the question, said we can pay monthly in arrears, interest payable monthly in arrears. So that means January's own can be paid in arrears. That means we'll pay it in February. February's own will paid in March. And that's why we are not paying anything in January. So I started filling it in from February. Do you understand?
Yes.
Okay. Now, still on the terms of the loan, they said the principal should be paid in 4 equal quarterly installments. The principal, how much is the principal here?
500 million euros.
Thank you. 500 million euros. So they said we should pay it equally in 4 installments, right, per quarter. So that is at the end of March, at the end of June, at the end of September, and at the end of December, right? So first we have to divide that 500 million by 4. When you divide 500 million by 4, how much is that?
125 million.
Thank you.
Yeah,
So you're going to pay,
135.
yeah, so you pay 125 million 4 times at the end of March, June, September, and December. Since we are only preparing from January to June, that means in our for our loan repayments, we're only going to have loan repayments for March and for June. Is that clear?
You said
No.
March
Yes,
and
ma'am.
what?
March and June, those are the end of 2 quarters that we are preparing for. Do you understand?
Yes.
Yes,
Okay.
ma'am.
Yes.
No shouting, Jerry.
Thank you. Now, okay, I think we have treated everything concerning the loan. Now, for the production, I think we have inserted the figures for raw materials. We have calculated raw materials. We have calculated direct labor costs as well as variable expenses. We have also calculated sales and we have imputed it. Now for fixed overhead, they said it is 18 million per month. So this one, there is nothing to calculate there. We're just going to insert 18 million each month. So we go back to our table and we insert 18 million for each month. 10 million, 10 million, 10, 10.
Sorry to ask again. What did you
Yeah,
say about that 5 years depreciation again?
yeah, I'm going to explain it now. Oh God. Okay. So let's talk about the equipment. So they said a new packaging equipment costing 84 million is to be paid for equally in March and September. It has a useful life of 5 years and a straight line depreciation policy. The depreciation of this equipment has not been included in fixed overheads above. Now, remember I said depreciation is a non-cash expense. So you don't treat it in your cash budget or in your cash flow statement. When you're dealing with cash, you don't deal with depreciation because it does not involve the movement of cash. So now, I think they said the depreciation has been included in that 18 million, it has been included in fixed overhead. That's when we are going to subtract it. But because they said it has not been included, you ignore it. You don't do anything about it. Do you understand? Just ignore depreciation. Ignore the information we're giving about depreciation. Do you understand?
Yes, I do.
Okay.
Yes.
All right. Now, we are told that the equipment is costing 84 million and is to be paid for equally in March and September. So 84 million divided by 2 is 42 million. So you are going to pay 42
42.
in March and the remaining 42 million will be paid in September. But we are not preparing till September. So we are only going to have record for March. So you come to March and you say 42 million. It's very easy. And then, yeah, I think, okay, rent income of 6 million per quarter is to be received. So that means if they say per quarter, that means we're only receiving in March, right? We're receiving in March rent income of 6 million, March and June. Okay, I think we have treated everything. Now, are we clear to this point? Let me try to.
Yeah.
Yes.
For me, I'm clear.
Please, can you put down
Yeah, I'm
your
trying
keyboard?
to. Oh, yes. I'm going to bring it down now. Okay. 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 I brought down the keyboard. So let's just go over it let's look at our cash budget. So for our inflows, we have imputed the receipts of receipts from customers, right? Both for the 25% and the 75% that sorry, for inflows is 2 months following. So this one in January now we have imputed because like we sold this 150 million in November, but we received it in January. So we've imputed this. Do you understand the workings that we did for sales to receive this? So we have imputed sales. We have dealt with rent. Rent is saying we are paying 2 months, like we receive it per quarter. So we have imputed it in March and June. For loan, this 500 million, we received it at the beginning of the period. So that's 500 million received from the bank. Then for the outflows, we have raw materials, which we have treated in our workings. We have direct labor, have variable expenses, fixed overhead, and the equipment that we bought, which we have to pay instrumentally in March and September, as well as our interest, which I have explained why we don't have a figure in January, and then loan repayments, which is per quarter, we have imputed for March and for June. So are we good to go? Should we calculate our total cash inflows and outflows now?
Yes, please.
All right. Okay. So total cash inflows for January, how much would this be? This is 650.
650.
Yes, 650 million. For February, It's only
150.
150. Yes. For March, we have 198.
198.
198.
For April, 180.
118 million.
For May, 160. And for June, 131, right?
Yeah, once again, one.
131 million.
31 million. So that's all for our total cash inflows. Now for our outflows, you might want to bring out your calculator for this one. So for January, we have 7.5 million plus 5 million plus 33 million plus 18 million. Okay, I think that is it.
73.5.
What'd you say?
73.5.
Okay, right. Then for February, we have 57.5 plus 8 million plus 39 million plus 18 million plus
122.5.
okay
Wait, plus 18 plus what again?
11.5.
Plus 11.5.
Yeah.
11.5.
So how much is that?
134. 134 million.
154.
134
Yeah.
million. All right. Then for March, we have 75 million
65
plus
yeah.
million plus
Plus
42
what? 6 million
42
plus 42 plus
plus
Ah,
18
how are you
18
calculating faster?
plus 42 again
plus 42 again.
plus 11.5
5 plus
plus 125.
320.
How much is that?
300 and
There's no approximate. Is it 320 or
3.
3?
No, it's not.
319.5.
Okay.
319.5.
Yes.
Thank you.
The
Now for April, right?
Yeah.
So April is 57.5. We're starting from
7.5 plus
57.5 plus
5.
plus 18
22
plus 11.5.
92 million.
How much is that?
92 million.
I'm
Yeah?
getting 125.
Oh, I don't know.
125. 125.
125.
Okay.
Okay. Now for May. May starts from 50 million
Plus
plus 5 million plus 30 million plus 18
mm,
plus 11.5. How much?
114.5.
14.5.
114.5.
Yes. And then last but not least, 52.5 million plus 6 million plus 3 plus 18 plus 11.5 plus 125. How much is that?
246.
246 million.
246 million.
Thank you. So now let's calculate our net cash flow. So we are going to be doing inflow minus outflow now. So our inflow for January is 650 million. And our outflow is what?
For January is 23.5.
So how much is that?
576.5. That is surplus.
February, yes, that is a surplus. For February, we have 150 million minus 134 million.
16 million.
10 million.
Yes,
16.
this is also a surplus. For March, we have 198 million as our inflow, and our outflow is 319 million, 319.5. which is what?
100
Minus
Yes,
minus
one to 1.5.
121.5.
0.5. Yes. So this one is a deficit. Yeah. Then for April, we have 180 million minus 125 million.
55
So that one
million.
is
55.
55, right? Yes,
Yeah.
surplus. Then we have 160 million for May minus 114.5. So this one, 45.
45.5.
45.5 million.
And then last one, for June, you have 131 million as your inflow. And out as your outflow, you have 246 million.
Minus 115.
Minus
Minus
150
115.
million.
Thanks. Did not see the people one.
So this one is a deficit.
Yeah.
Other bin.
Now, how much did we have at the beginning of the period? How much were we owing in our
I think 130 million. I've forgotten.
yes,
Is it
125?
130?
Is
130
125?
million.
100.
125, yes.
So you were owing 125 million. So this is minus, sorry, minus 125 million. So how much would that be in total? If you do 576.5, 125.
576.5 minus 125.
Seven.
451.5.
Okay,
Are we going
400
to? Yeah.
points.
Okay.
So this one at the end of January will be what you have at the beginning of February. So whatever you have here, you bring it to February. So it will be 451.5. Do you understand what I did here?
No.
Yes.
Wow.
So whatever you have at the end of one month is what you have at the
Be a
beginning
balance
of
but
Beginning of
for
the
the
next
next month.
month.
Okay.
exactly.
Forward.
Yeah,
Yeah.
brought forward exactly. So after getting for this month, you take it forward, carry it forward as the beginning for the following month, right?
Okay.
Yes. So now we can add this 451 million to 16 million that we had in February. What's the answer there?
To add or subtract it.
467.5.
Yeah, we are adding. The reason why we subtracted January's one is because it is a deficit. It
Because
was
the
minus
deficit.
125 million.
Okay.
Yeah.
Okay.
This is 467.5 million.
0.5.
Yeah, so you carry it forward.
On subtracting here, right?
Yes, so you subtract 400 and 121 from 467.
That is 346.
Yes. Okay.
Sorry.
Um,
346.
Yes. And then you carry it forward. Are you with me?
Yeah.
Yes.
We are with
Okay.
401 million
401.
Okay.
plus
And then
45.5. 446.5
446.5.
okay.
Minus
Carry it
115. 331.5.
yeah.
1.5 million. And that's
Sorry.
our cash budget. It's as simple as that. So we are done with our cash budget now. So do you have any
So that is
questions?
to say, are we doing that our budget for January is 451 million.5,
Yes. So
like the
like
first one?
it's not necessarily your budget. When you say budget, it is like your list of income and expenses. That 451 signifies how much you will have at the end of January. So that's like your balance. It is your balance.
Okay, I understand. Yeah.
So
Office, can you
450.
come again?
So that amount that you have at the end is the amount that will be in your bank, like the amount of cash you will have at the end of January. That's what that 451 million signifies. So basically, if you're looking at the last two lines, it's basically saying, okay, this is how much I had at the beginning. And then after receiving and giving, I had this amount at the end. Do you understand? Yeah.
Yes,
So
ma'am.
at the beginning, you have 125 million. you took a loan of 500 million, you made you received some things from your debtors, you received rent, and then after that you now started paying something. You paid for purchases, you paid for labor, you paid for all of that, and then at the end you now had 451 million left. So you carried it forward to February and you continued the cycle like that. Do you understand?
Okay. Yes, ma'am.
Okay, any other questions?
Yeah.
Okay.
I don't have
Um.
question, but
Yes.
Okay.
okay. Let him talk when he's done talking. I just wanted to ask you to like move forward, move up. Like I wanted to screenshot the workings.
Okay.
So
Yeah.
yeah,
Sorry, I'm going to make it.
maybe when he's done asking his question.
Okay. All right then. When he's done. Okay. So what
Sorry, I put
question
it
do you
under
want to
my
ask?
pillow.
Are you with me? Do you have any more questions?
So this have to prepare cash budget, right?
Yes. So
Okay.
simple first
Just
step. So
following the procedure.
yes, you just follow the procedure and you try to pay attention to the instruction that you're giving on how you receive money and how you pay. So that timing is very important. So you see that when they said we are going to receive the money 2 months later, we took account of that. When they say you receive it, you pay the following months, we took account of that. Do you understand? So you just have to pay attention to that timing very well.
All right.
Okay. Do you have any more questions? Okay. Trying to make this as small as possible for you.
Ma, so please, if there's depreciation there in
Yeah.
the fixed overhead costs, we are
Yeah, I
going to
can.
subtract. We are going
She
to
Yeah.
said that
subtract it.
about the depreciation. She said about the depreciation that it doesn't involve cash, that you don't need to calculate it, and it is not. And they said it's not included. So I
Exactly.
think this was
Yeah, in
included.
a case
It
where
will be
it's
minus
included.
6, but it's not included. So don't bother about it.
Exactly.
Okay.
Yeah.
Okay, can I screenshot now?
Yes, you can. Okay, so where do you want to screenshot?
So the working.
Okay. Let me go
Ma,
to
please, can the recording be sent to the group?
I don't think so.
I'll
The
I'll
workings too.
I have recorded it, so I'll send the recording to the head of technical support and they'll probably
Okay.
share it
Okay,
with
thank you.
as the
Thank you.
material too. So
Okay.
the material too, I'll send it.
All
Okay.
right. Thank you.
Okay.
Thank
Move
you.
up. I'm done with one.
Thank you very much.
Okay. This is 2.
Okay. 3, 4,
Okay. There's not much
5.
in.
Okay. Thank you. Thank you
Yeah.
very much for the class.
Thank you very much for attending. Very nice
Thank
to
you
be
very
here.
much for the lecture.
Thank you, ma.
I enjoyed it.
Really appreciate.
Thank you. Enjoy your weekend.
And you too.
And you
You
too.
too, ma.
Thank you.